What if I told you that the FTX collapse is still shaking the crypto world in 2025? Even after years, its impact is sending shockwaves through Bitcoin, altcoins, and regulations worldwide. If you're holding crypto, you need to see this. In this video, we'll break down how FTX's downfall still affects the market in 2025, the biggest winners and losers post-crash, what traders are doing now to protect their investments, and a must-know prediction for the future of crypto. Stay till the end for expert insights and a strategy you don't want to miss. Let's dive in. Let's rewind to November 2022, one of the darkest moments in crypto history. FTX was a top crypto exchange, founded by Sam Bankman-Fried. It claimed to be a safe and trustworthy platform for traders and investors. But behind the scenes, billions in customer funds were secretly misused, leading to a massive liquidity crisis. As panic spread, withdrawals were frozen, and FTX collapsed overnight, leaving millions of users stranded. The fallout triggered a wave of bankruptcies in the industry, wiping out portfolios. SBF was later convicted of fraud, exposing deep flaws in centralized exchanges. The FTX scandal is far from over. Its effects are still shaking the crypto world. Here's why. Regulatory crackdowns have led governments worldwide to tighten crypto regulations to prevent another FTX-like disaster. Many former FTX users are still waiting for compensation, with legal battles ongoing. Traders now prefer decentralized exchanges to avoid similar risks. The collapse shaped the future of crypto, making investors demand more transparency from exchanges. FTX was a wake-up call, reminding us that not your keys, not your crypto. Always prioritize self-custody and trust only transparent platforms. The FTX collapse wasn't just a one-time event. It reshaped the entire crypto industry and its long-term trajectory. Here's how it's still impacting the market in 2025. FTX's failure shattered confidence in centralized exchanges, making big players rethink their crypto strategies. Many institutional investors paused crypto investments, fearing a repeat of FTX. BlackRock delayed its Bitcoin ETF approval due to post-FTX risk concerns. New blockchain projects are finding it harder to secure VC funding, as investors demand more transparency and security. Governments worldwide tightened crypto laws after FTX, leading to global regulatory clampdowns. Authorities like the SEC, CSA, and MICA enforced tougher compliance rules. Binance had to exit multiple markets due to stricter scrutiny. While stricter rules made it harder for bad actors, they also increased barriers for new projects entering the space. The bear market lasted longer than expected due to shaken investor confidence. Bitcoin struggled to regain momentum as trust took a hit. Instead of purely speculative trading, real-world utility projects gained traction. Some altcoins like XRP and VT thrived by focusing on transparency, real use cases, and compliance, winning investor trust. FTX proved that centralized platforms aren't always safe, leading to a DeFi explosion. More users shifted to decentralized exchanges like Uniswap, PancakeSwap, and GMX. Not your keys, not your crypto became a golden rule, boosting demand for hardware wallets like Ledger and Trezor. Crypto projects had to prove their reserves through on-chain audits, making shady operations harder to hide. Despite setbacks, crypto isn't dead. It's evolving. Stronger, more resilient projects are leading the space. Institutional interest is returning, but with a focus on regulated and compliant platforms. Crypto adoption continues, with countries and businesses integrating blockchain into payments and finance. The FTX crash was a wake-up call, but it also pushed crypto toward a more mature, transparent future. What do you think? Is crypto stronger than ever or still recovering? Drop your thoughts below. The FTX disaster left traders in shock, wiping out fortunes overnight. Here are 3 real-world stories of traders who lived through it, and what we can learn from them. Mark was an ambitious trader who believed in Solana and used 10x leverage on FTX. He ignored risk management, thinking FTX was too big to fail. When FTX imploded, Mark's entire portfolio got liquidated overnight. His hard-earned savings? Gone in seconds. Leverage is a double-edged sword. Always manage risk. Now, Mark only trades on decentralized exchanges and stores his funds in cold wallets for safety. Sarah followed the golden rule of crypto. Never keep all your funds in one place. She had her portfolio split, 50% in a cold wallet and 50% on exchanges for active trading. She noticed red flags about FTX's finances in early November 2022. Without hesitation, she withdrew her funds just in time. Dior can save you from disaster. Never trust centralized exchanges blindly. Keep most of your crypto off exchanges in self-custody wallets. John was a dedicated crypto investor with $40,000 on FTX. He believed in crypto's future and had a diversified portfolio. When FTX collapsed, John lost everything in one night. He almost gave up on crypto, but instead of quitting, he pivoted. John shifted his focus to DeFi projects. He studied yield farming, staking, and low-risk DeFi strategies. Over time, he recovered his losses and became a smarter investor. Risk management is key. Don't go all in on centralized platforms. Losses aren't the end. Smart investing and adaptation can lead to a comeback. The FTX crash was a harsh reminder of the risks in crypto. Learn from these traders and safeguard your investments. Avoid excessive leverage. Don't gamble with borrowed money. Self-custody is king. Keep most funds in a cold wallet. Stay informed and adapt. Crypto rewards those who learn and evolve. The FTX collapse was a wake-up call, but it also pushed crypto toward a more secure and transparent future. Here's what smart traders should be doing right now to stay ahead. Not all exchanges are created equal. Stick to regulated, transparent, and audited platforms. Centralized exchanges with strong security, Kraken and IBKR. Decentralized exchanges for safer trading, Uniswap, PancakeSwap, GMX. Avoid exchanges with shady financials, high leverage, or unclear reserves. Transparency is key in 2025. The number one lesson from FTX: not your keys, not your crypto. Store at least 70% of your assets in a hardware wallet like Ledger or Trezor. Only keep what you need for active trading on an exchange. Use multi-sig wallets or DeFi vaults for extra security. A centralized exchange can freeze your funds at any time. Don't risk it. The crypto survivors of 2022-2024 have one thing in common: strong, real-world use cases. The best long-term bets in 2025 are XRP, VeChain, and Algorand. Avoid hype-based meme coins. Invest in real-world adoption. The next bull run will be driven by new tech. Stay ahead by focusing on AI and blockchain integrations, real-world asset tokenization, and regulatory-compliant crypto. Research AI plus crypto projects. This trend could spark the next wave of mass adoption. The crypto market in 2025 is evolving. Only strong, informed traders will thrive. Use secure exchanges and DEX. Store crypto in cold wallets. Invest in utility-driven projects. Watch for AI and blockchain trends. What's your top strategy for 2025? Drop your thoughts below. Follow us on X, YouTube, Instagram, TikTok, Threads, Snapchat, Medium, our True Crypto Insights podcast, Crypto Tribex blog, truecryptoinsights.blogspot.com.